Welcome to TRADEREP. This is Short Hammer. It is the 21st of September 2019, and we're taking a look at Amazon. Now, Amazon is back inside of that channel that we've been discussing for well over a month now, the 1830s by the 1740s. And we've been bouncing around inside this channel for well over a month. And what we've been mentioning is that for the bullish perspective, we really need to stay above the 1833.78. And when we fall below that, we have to be careful because we're back inside of that channel. And the inability of Amazon to make higher highs once we've pushed above that channel on consecutive days is definitely a signal. It needs, like, these gray areas are my supply demand zones. These pink lines are my supply demand lines. The zones are stronger than the lines. So its inability to break above this zone, and I've done this and said this in multiple videos, to break above this zone is a tell. The next tell is when it pulls back below this 1833.78. If we look back here, 1, 2, 3, 4, almost 5, 6, can't get through. 7, didn't close above, then we closed above, back inside the channel. 1, 2, back inside the channel. And the inability to close above this channel and go do higher highs on multiple days, that's what we wanted to see. Higher highs multiple days back to back, and then a break above this supply demand zone. We've been unable to do that. So once we're below here, then we can use the channel as the supply area that we short from, and a break and hold above as our cut level, or if you want to say $2 or $3 above the supply demand line, we exit. So we've just been fading. And if we look back, the floor that we wanted to watch, if we were going to watch something, was if we go below this area, this 1795-ish, which was the low on the day on Wednesday on the FOMC. When they announced news and we dropped down, we found a little bit of support there. Let me switch these candles. One moment. Let me switch this. Let me switch to regular candles because I want you to be able to see all the accurate. Okay, these are the regular candles. So if we look, this was where are we? This is 17th. Oh no, here. This crazy candle here, that was FOMC on the 18th, and look where we stretched to. 1796-ish, 1795. Once we broke below that 1795 area, I knew we were in trouble. And maybe we're going to get back up over 1805. But 1805 is that's the floor. That's part of the floor. That 1805 through the 1790s is a floor we need to hold to be able to springboard up. And you can see this numerous times before this 1805 level. Boom, boom, boom. 1805 level, boom, boom, boom. 1805 level, boom. The areas where it's been a lot of interaction here. Look at this. And once we couldn't get over 1833, I know there are people that faded this. And we may be headed down to the 1740s. It depends what next week looks like. But the reaction to the FOMC was not what we expected, because we didn't even make a new high on the day. And do I think that we're going to sell off to nothing? Nope. I think we're going to pull back. I think it's a strong possibility that the buyers do step in and that we have a bounce here. But we just have to watch this carefully if we fade to the 1740s. But I'm uncomfortable getting long here because I feel we're in a mid zone, that we're below the 1805 area, which was the floor for numerous days. The 1805 and the 1798 were the floor, and we're now even below the 1792 supply demand line. So now I'll wait for us to either regain these or for us to fade down to the 1740s and maybe try purchasing there to see if we hold this bottom. But that's what I'm watching for. As far as for me, I'm just waiting for Amazon. I trade Amazon from the extremes usually. And when it's in the channel, I'll trade from the bottom of the channel up, from the top of the channel down. And that's my perspective on Amazon. This is on the daily chart. If we want to look at the 4-hour chart, we can. And see, the 4-hour chart looks a little bit different. This looks as if we're going straight to the 1762 is the next supply demand zone. But we may be just testing the bottom of this channel. But we'll see what happens. But the first sign, the inability to really springboard above these 1833s and get above the 1850s, that's an issue. That's a weakness issue. And I know that they've just been, I'll say, stacking the deck and putting out all types of news that's bad for Amazon. But we definitely wanted, especially with Microsoft doing that huge share buyback, we definitely wanted this bad boy to rocket and break above all this turbulence. Haven't been able to do it. So we're still stuck in this 1833 by 1744 volatility box, or should I say just box. And a break outside of that with volume, we should see a strong move in either direction. But just watching this, I think like Dave mentioned, Amazon is setting up for a rip and run. I do believe that, but I believe that the market wants it from a certain price to be able to mitigate their risks based on the overhang of either more or either more interest rate cuts or no more interest rate cuts or the trade war. I think there's a price point that people want on Amazon, and until we get there, we're not going to see the influx of buyers of big time money flowing into it until we get to whatever that number is that they want to buy from, where they feel the risk is worth it. But that's what I'm looking at on Amazon. And if you've watched any of these Amazon videos, you've had all these levels prior to this week. These levels I've been doing on all these videos, so they would tell you exactly what we were thinking on Amazon, the levels, and what to watch for, and what we were thinking could happen from this level down. You can look back and see, stuck inside the box, all this time stuck inside the box, and an escape from a channel and then a pull back into it usually isn't a good sign. Then trying to escape again, then a failure, then back into it. And this is the 200 SMA, and it's wonderfully curving down. So we'll see where we end up. We're below the 50, we're below the 200. So this is interesting. But keep an eye on Amazon. You have the levels, and depending upon how you play different tickers with your strategies, you can use the information that we're sharing to see if that helps you with your trading. But these are clear levels on Amazon and clear things to watch for. I'm not long Amazon unless it's over 1805. And right now, to me, the safer move would be, depending on where we open on Monday, if Amazon is below the 1805, I'm probably going to fade it and, give it maybe a $3 stop. And that's probably what I'll do. If it's below 1790, it's like that'd be my stop. If I'm not above these supply demand lines, then I'm looking for us to go to this supply demand zone down here. And that's my thought process on Amazon. And I'll probably, get a position faded down to here. If we open up and we're up and above the 1798 and it looks as if we have a market trending bullish, then I'll probably get long Amazon with my stop of 1792. So I'll use these lines against each other if I feel as if the market is trending in a particular direction. But when I'm in a midpoint, I have to use the nearest line for my entry and also the intraday setup and also the market trend. And usually if Amazon is trending down, the overall market is trending down. If Amazon's trending up, the overall market is trending up. Usually you want to watch Amazon, Microsoft, Facebook, Apple. You watch those, and especially if you're trading the S&P, you watch those, and those will usually give you a general direction of the market.